Welcome to another presentation at the East Trade Winds. Our guest is Eric Sonego from Capros.
Before I talk about anything about business and planning and things like that, I am a student of mind mapping. I do everything that is important on a mind map. I learned that back in, I would say, when I was still in university. And mind mapping puts everything in a smaller context in front of my eyes. And then I know how far I have to go or how close the goal is. I don't do mind mapping for everything. I don't do mind mapping to walk my dog, for instance. I let the dog take me to places, but I don't do mind mapping for the dog. And I don't do mind mapping socially. I do mind mapping at work for challenges that are beyond the capabilities of the office. And I have to mind map it to see, are we going to need any resources? Are we short selling ourselves? Is the way there shorter than we think? All of that kind of stuff that happens with mind mapping. So I'm a great student of it. And in my bookcase behind me, there's 10 books on mind mapping. Now, my spouse thinks I'm crazy because she sees these scribbles. My staff thinks I'm crazy sometimes when I'm showing this in a meeting. Crazy or not crazy, it gets you places. Now, that's mind mapping. Now, the other thing is, I've heard a lot of derogatory things about receipts today. The receipts is, when I first started in the first firm I worked with, they were doing forensic accounting. And they had a project in a large company that they knew one of the higher ups, one of the officers, was sifting money from the company, but they could not prove it. They did audits and they couldn't prove it. They did all kinds of stuff, they couldn't prove it. So they hired three of us who were then in our early 20s, and they told us to work in that company for 2 or 3 months, get to know the staff, get to know what's important. So when I got there, the first thing I looked at was the garbage can. And the garbage can was a gold. I thought that there were receipts in there, but I couldn't put my hands in it. So I requisitioned the garbage cans after they got picked up. And that's when we knew who was having an affair with whom and who was sifting money from the company, from the garbage that was being thrown out. So receipts, it's not what you write down, it's what you don't write down or what you put in the garbage that the auditor looks at. A good auditor would look at. It's not what you give the accountant at the end of the year. It's what you don't give the accountant at the end of the year. That is also a receipt. Now, most businesses don't steal from themselves, so that's never an issue. And I always tell my clients, if you want to have a good time with a tax collector, you inundate them with receipts. If they want your car receipts, you send them everything you have, everything, that you have in the box, you send it to them and you say to them, you count it. And sometimes they get assaulted by the data and they will let you go with it. So receipts, it can be used to the benefit of the taxpayer many times if you inundate the tax collector with receipts. Now, you don't send receipts to them and don't keep copies. So you have to be able to make copies of that box yourself in case they want to question any of the receipts. So in case they have someone like me working for them who likes to go through receipts. When I was transferred to Ottawa, I was then a civil servant. I left accounting when I had my first child because my wife did not want to be married to someone who works 12 hours a day in those days. So when my first child came, I left, I crossed the street and joined the government. And the government transferred me to Ottawa because I am bilingual. And in Ottawa, my first file was a place about 40 kilometers from Ottawa called Woolly Cotton Mills, who was in a fight with the tax department about inventory. I was at finance and I had the file and I asked CRA to go again and talk to this woman. So what this woman did is she put all of her receipts in a barn and all of her records in a barn. And between the barn and the house, she put her cows for 2 weeks. When the CRA auditors came, she opened the back door of the house and she said, "They're in the barn, you go get them." And these guys were wearing three-piece suits and black shoes. They took one step and they said, "Where is that paper? How much you say the inventory was?" And they signed it and they said, "Oh, I think you're right." And they came back to the office and they said to me, "The taxpayer is 100% right." So it's how you organize your receipts sometimes that helps in selling it to the legislator or to the finance person. And sometimes, you have to put something between you and the receipt. And the more that something is unpalatable, the more the receipt stands up. The more it's not unpalatable, the less the receipt stands up. So that's something that I teach when I give accounting second level courses. And I always say to my students, it's not the receipt, is where you put it and who is between you and the receipt. In business, what happens with the difference between a well-planned company and a not well-planned company from an accounting perspective is whether the company knows what their obligations are to third parties. The third parties could be their employees, it could be their bankers, it could be the government. But sometimes they don't know their obligations. People say, "I'm just paying my loan. So what does the bank need with me if I'm just paying my loan?" They keep forgetting that in a business loan, the bank is a kind of your partner. And they want more a little bit than your payment. They want to get your quarterly statements. They want to know that you're going the right way and not just paying the bank loan. It could be your employees that want to know that their payroll is done on time, that their deductions are sent to the government. It could be the government who is interested in how you're going and how you're going to pay them at the end of the year. So sometimes record keeping and receipts is something that applies to more people than just the person. Now, the other thing that happens to a lot of my clients is that they count on someone else to remember. So I get 2 or 3 calls a day saying, "Do you have a copy of this that I gave you 3 years ago?" And sometimes it could be valid. It could be something that we've prepared ourselves, and therefore we have copies. But sometimes it's something that they're giving us, like medical receipts that we return to them. Now, before we digitized the office, we trusted the client. And now we don't trust the client. We digitize everything and we put it in their file. And when they come for receipts or the government wants receipts, we look for it in what they've given us. But sometimes people do not understand that the receipt is theirs and not the accountant's. It's only the accountant's temporarily. Now, the less involved we are with the client, because what we don't tell the client is that we have a dual relationship with clients. If in Canada, especially, if we do your personal taxes, we're not your accountant. We're your tax preparer. We don't sign the tax receipt, the tax return. We just give you a tax form, we e-file it, we send you a bill. We don't look at the information too deeply. We just make sure that it's right. But when we're your accountant, we are managing your business with you. And we don't sign our name to anything that we don't think is plausible. So when I do the year end that's behind me that I'm doing it, the reason it takes time is because I have to assure myself that all of these numbers that I'm given are backed up by receipts and they're right. Because society expects me to do that for them. Now, the more society expects me to do that for them, the more I have to be careful. So, for instance, in my office, we are very diligent on how we do year ends for nonprofit organizations. Because a nonprofit organization is not taxable. And the reason they're not taxable is because they're doing something policy wise that the government wants to do, but doesn't have the resources to do. That's the definition of a nonprofit organization. So because of that, society wants those people to be really up aboard and to really be reporting properly. And when we do a nonprofit organization, we make sure that there is no hanky-panking in the back. There is nobody owning the car that's lending it to the place. There is no transactions between the employees and the corporation. I have minutes of every board meeting that takes place in the year, and I make sure that all of the activities were backed up by the board meeting and the board of directors. That's a nonprofit organization. When I do a profit organization, I don't look at board of director meetings of my average profit organization. If I want to attend it, number one, I'd have to become better at golf. Number two, I have to make sure to know where they're playing that board meeting at, because they're not going to give me the outcome of their board meetings. They're going to give me the outcome of their banking, their outcome of their loans and things like that, but not the board meetings. I will ask, and I will make sure that they've had one at least that is recordable to go in their minute book. The other thing that people don't understand sometimes when they incorporate businesses is that they create a life. Now, you may not be very interested in the life you've created, but the government is really interested in it. What happens when you incorporate is that, especially the people I see across my desk, is that they become very cavalier with the corporation that they own 100% of. They don't maintain it. The tax department has caught on to that. So if you take dividends from your company, like most of you will take dividends from your corporation, and you do not enter that in your minute book, the tax department, and I can speak for three of them, US, Canada, and Mexico, those three places, I know they do it. So if the Mexicans do it, I can guarantee you that the rest of the world is doing it. The tax departments, the rest of the world is doing it. They go to your minute book, to your association of shares book. They look at it and they see that if you've had a board of directors meeting to agree with those dividends, to say you should be paying those dividends. Now, when that happens in Canada and the minute is not there, the CRA takes the position that the dividends you've taken do not count as dividends. They're just draws. And therefore, they don't get taxed preferentially. They get taxed just as draws. And that happens 2 or 3 times a year in my office. 2 or 3 times in my area, we have requests from the CRA for minutes of corporations that are one-man corporations, some of them, that took dividends. The other thing that happens in Canada, especially in Canada, when you take dividends out of, you get married to the company. And the tax legislators have taken the approach that if you get married to the company and the company dies, you're responsible for all the debts the company had with the government. In Canada, Section 160. The other thing that happens in Canada in personal taxation is estate taxation. And people don't understand that estate taxation is people taxation. It's not building taxation. It's people taxation. It's individuals who have money who do not want to give it to the government. That's how the government looks at it. The person who made the money died. The money is now in a place called an estate. And the individuals in the estate, usually children of the person who died, do not want to pay any taxes. That's where the discussion starts with them and the government. So in estate taxation, you have to be able to have record keeping when they were alive and record keeping after they pass. You have to distance yourself from the relatives because now you're reporting for an estate. Now you're responsible for all of the relatives and not for one. And the government takes no prisoners when they're talking with an estate. Absolutely none. The state taxes are high. If you make $2,000 in interest in Canada, you are not taxed. But if an estate makes $2,000, they have to pay $250 in tax. That's how mercenary they are. So sometimes record keeping is the planning of not having an estate, is the planning of not doing something, and it's the planning of having an estate that is going to be non-taxable for a long time. While the person is alive, planning while the person is sick, planning while the person is dying, and planning afterwards. The worst thing that happens in the Western world is when a couple is alive, one of them dies, the legislator never comes to the other person. They let them be. But when that other person dies, if they've left property, that becomes, in some places, you have to send the information to the government and they do a probate and they take a pound of flesh from that. If you don't go for probate, you have capital gains from the transfer of the property to the estate. You have, inheritors and beneficiaries who do not want to pay tax, who want the old person to pay tax, who's dead already. So that's the fight we get on between them, the government, and the old person. That's why I am an early riser. That's why I go to bed early. And that's why I walk my dog at lunchtime. Because some of the most important meetings I have in the day is between me and my dog on the walk. Because on the walk, I can tell my dog things that I cannot tell my spouse, my staff, or my clients. And the dog is a phenomenal listener.
Unlock the full potential of networking with East Trade Winds. Are you eager to connect with our esteemed guest speaker and delve deeper into the ever-expanding universe of connections? Simply scan the QR code now and embark on a journey of endless opportunities. Join us at East Trade Winds, where we gather online via Zoom every Tuesday from 8 to 9 a.m. Eastern Standard Time. Whether you're a seasoned professional or just starting out, you're welcome to connect with us. Seize the moment, register for free, and start exploring today. Fancy sharing your insights as a guest speaker? We're looking for you. Reach out to Wayne Pratt to ignite your speaking journey. Email him at wayne@motivateyou.ca or connect with Wayne on LinkedIn. Don't wait. Take action and be a part of a global community that's shaping the future of business networking.